Hey, good morning, everybody. Today is Wednesday, September 9th, 2015. My name is Cliff Backus, and this is your push button stocktrading.com daily video market review. I'm running a little bit late this morning for an important appointment, and so this is just going to be a real quick down and dirty report. Markets traded sharply higher yesterday on heavier trading volume than Friday's pre-holiday session. The Nasdaq leapt 2.7%, while the S&P 500 advanced 2.5%, all but erasing last week's losses and giving the O'Neill timing system a very weak confirmation of a new uptrend. Technically, yesterday met the definition of a follow-through day. Both the Nasdaq and the S&P 500 are more than 4 trading sessions from their recent low, and traded at least 1.25% higher on heavier trading volume than the prior session. That prior session, however, was the Friday before a long holiday weekend and traded exceptionally weak volume. So the volume hurdle for the confirmation day was very low. Trading volume yesterday came in well below average daily and was also below Thursday's levels. All that noted, we are in a confirmed uptrend in the market, and followers of the O'Neill timing model can begin to carefully put money back to work on the long side. Keep your stops in place. The market's volatile, and I would expect that volatility to continue for the foreseeable future. Advancing issues bettered decliners yesterday by better than 7-2. While not looking healthy by any means, the New York Stock Exchange advanced decline line suddenly looks a little less bearish. New highs edged new lows by 63 to 52. In spite of the bullish action in the market yesterday and the O'Neill market timing model confirming the uptrend, our market timing model remains on a primary sell signal, with a secondary signal of aggressive buy. Most traders should continue to maintain stops at their tightest levels, continue to accumulate cash, and perhaps hedge portfolios with contra ETFs. However, our most aggressive traders can begin to selectively buy, keeping in mind that our primary signal is on a sell. On a more bullish note, small capitalization stocks outperformed large again yesterday, as they have since the market low on August 24th. Small caps continue to outperform on a 10-day moving average basis, which is more typical of a bull market. Our swing timing model is indicating a neutral condition in the market. The market remains squirrely. We should continue to err on the side of caution. Again, we're on a primary sell signal, while our secondary signal is aggressive buy. This market is going to continue to be volatile and prone to whipsaws for a while. An aggressive buy signal means only the most aggressive traders should venture back into the market on the long side. Our underlying market timing signal is still a sell signal for conservative traders. Be careful. A final note, I am going to be traveling Thursday, returning on Monday. I will not be producing a video while I'm away. The next video will be on Tuesday, September 15th. I'll see you then. Let's see what the Nasdaq Composite was up to. Nasdaq was up 128.01 points, or 2.73%. It closed at 48.11, blocking at resistance here in the 48.37 area. Let's take off the markups. Notice how the Nasdaq closed right at the very top of its daily trading range. That's short-term bullish, and would indicate that perhaps the market wants to go a little bit higher here. We'll see if the market can take out resistance here at the 48.37 area. Trading volume yesterday was heavier than the prior day, but as noted, it was below average daily and was well below Thursday's levels right here. Technically, for you followers of William O'Neill, the market confirmed the uptrend yesterday. Right now, the market is bracketed by support down here in the 42.92 area. We have minor resistance up here in the 48.37 area and more significant resistance up here in the 4900 range. Our market timing model is on a sell signal, but Our secondary signal is an aggressive buy for aggressive traders. Most of us should be remaining in cash with our stops at the tightest levels. We may want to hedge our portfolios with contra ETFs at this point. However, the most aggressive of us can begin to dabble back on the long side. Keep in mind this is a volatile market and prone to whipsaws. Keep your stops in place. Let's see what the S&P 500's up to. S&P yesterday also had a very good day. It was up 48.19 points, or a little bit better than 2.5%. S&P closed at 1969, closed right at the very top of its daily trading range, which is a bullish sign, at least over the short term. Trading volume was higher than the prior day, confirming the uptrend in the market on the O'Neill timing system. The S&P is bracketed by support down here in the 1867 area and minor resistance up here in the 1993 range. More significant resistance up here in the 2044 area. We are on a sell signal on the S&P 500, but like the NASDAQ, we are on an aggressive buy signal, which means that the most aggressive of us can begin to dabble again on the long side. This is a volatile market. The O'Neill timing system's on a confirmed uptrend, which indicates that traders may want to begin to get back on the long side here. Keep in mind that in this type of a volatile market, anything that you buy is subject to whipsaw stops. Be careful. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.